I think that the first thing, when you look at SpaceX, most people that have talked about the valuation of SpaceX have set a valuation that's very far below 1.8 trillion. Obviously now it's over 2 trillion because the price action we saw the first couple of days. So it is very difficult to get to that 2 trillion valuation. I published some work last week, and you've got to believe some pretty outlandish things to get to that 2 trillion. Broadly, you've got to believe that Elon Musk is flawless in everything that he does, which we could debate. But anyway, so you then have this extremely high valued business drop into the passive funds of potentially millions of investors around the world, and this is a long way from what Jack Bogle and others thought about when they set up passive investing as being long-term, very diversified, having your share of corporate America, as he would have thought of it about back in the day, when we've already got a very concentrated market in terms of the US and also globally now in all the tech stocks, and now you've got something that's extremely expensive by almost any measure dropped in as a very large company, and some index providers are adjusting their rules to accommodate it. It makes sense from their perspective because otherwise people say, well, your index isn't complete. You've left out one of the biggest companies in the world. But nevertheless, this is, I think, not what people are expecting in their passive portfolio.
No.